Welcome back to Fairfield Investing. Today we're taking a look at AirBNB Incorporated, ticker symbol ABNB. We've got price per share of $134.98, a market cap of $86.51 billion, and an enterprise value of $78.18 billion. If you don't know what Airbnb is, started in 2008, world's largest alternative accommodation travel agency, also offering booking services for boutique hotels and experiences. Airbnb's platform offered over 7 million active accommodation listings as of September 30th, 2023. Listings from the company's over 4 million hosts are spread over almost every country in the world. In the fourth quarter of 2022, 47% of revenue was the North American region. Transaction fees for online bookings account for all of its revenue. So a key here is 47% of revenue coming from North American region. So that's not just the United States, that's also Canada or possibly Mexico. And transaction fees account for all of its revenue. Moving on to the financial strength and profitability, we see cash debt ratio of 4.75. So for every dollar of debt, they have $4.75 of cash. So fairly good position when it comes to cash and debt. When we look at profitability, we see that versus the industry, versus history, everything is just about as high as it's been, if not the highest it's been. So we've got gross margins, one of the best in the industry, and the highest they've had in the last 10 years. When we look at operating margins, we've got their current is the highest in the last 10 years. Net margins, highest in the last 10 years. And for free cash flow, also the highest in the last 10 years. So for profitability, this company's doing the best it's done in the last 10 years. When we look at management strength, we see once again solid green bars. And it only makes sense that their management would also be doing the best it's done in the last 10 years. So this company is in an advantageous cash debt position, and it's doing the best it's done in the last 10 years. When we look at the price to earnings ratio, we see that versus history, their minimum is 13.8 and their current is 16.3, so just above their minimum. When it comes to trailing 12-month revenue, we've got $9.6 billion versus that $86 billion market cap. So just about 8 times their trailing 12-month revenue is their current market cap. Looking at the financials in graph form, we do see a clear positive here of revenue and net income being positive but still steadily increasing, and we see net income negative here, and then flipping over in 2022 and continuing that trend as well as increasing with that revenue. We see cash debt remaining pretty steady here, and the cash pile increasing. We see a cash pile here of $6.3 billion versus $2.3 billion in debt. And the most recent, we have $10.9 billion and $2.3 billion in debt. So the debts have stayed the same, roughly, and the cash pile has almost doubled. When it comes to shares, we see more share sales, and then it stopped in what looks like late 2022, early 23, turned into some buybacks, and now another sale here. To gain further insight into where this company could be headed and see what's currently priced in, let's run a DCF. So right away I see low business predictability, so maybe a little less accurate. And when it comes to earnings per share, there's no data. Free cash flow, there is that 3-year average growth of 200%, although there's no 5, no 10. So it's going to be a little bit harder to base our judgment here, but using free cash flow, let's see what's currently priced in. So currently there's about 14% growth priced in for the next 10 years, which could be achievable. On a bearish end, let's see if they were to achieve 10% growth for the next 10 years, then a fair value would be closer to 102, whereas currently we're at 134. And on a bullish end, if they were to grow at 20 or maybe even 25%, then the fair value could be closer to 200 versus that 134. And for 25% growth, a fair value would be closer to 278, whereas we're currently at 134. Although this is a very bullish estimate. 20 is a bullish estimate. 15 could be somewhat more realistic. We've got about 14 priced in, and if they were to grow at 9 or 10% for the next 10 years, then obviously there's room for downside. But all in all, this is my hypothetical framework and assessment of AirBNB stock. Leave a comment below if you have questions. Hit the like button if you like the video, and I'll see you next time.